Sunday market update, this time with me, Jeff Pine, who, of course, is a senior trader with Actions to Wealth, who bring you the Sunday market update each and every Sunday. I'm glad you could join me. I'll tell you what I'm going to do in terms of how we're going to approach today. I'm going to show you um, my setups for the week and how I'm actually getting a bias, and that's what I'll be looking to trade throughout the week. I'll be sharing that with you shortly. And then I'm going to share something, what? A little bit different, I suppose, but you may have seen in the past me do this before. It'll just be a little bit different than the norm. I can't share my screen at the moment for some reason. I will be trying very hard to do that. Show taskbar, that might help. And find a control panel. I don't know why I have trouble with this all the time. Here we go. First up, you should be seeing a disclaimer on the screen. Can you see a full screen or can you see a split screen? That would be wonderful if you could tell me that. Full screen, beautiful. Thank you, Sam. Rightio. So, whilst you're reading that disclaimer, I will, thank you, KR. I will enlighten you with a very important announcement before we go any further. I need to quash really a vicious rumor. And the rumor that I have to quash is that there will be, or I'm going to say this, there will be no 15% tariff levied on this show, ever. I just thought you'd need to know that before we move on. And whilst you're reading their announcement. What I will also now do is, as promised, go and show you my setups. Are you now seeing my chart, or do I have to select another screen to do that? If you could let me know that, that would be wonderful. I am now sharing my uh, Aussie Yen chart, Aussie Yen weekly chart. If you can see that, please let me know. And we can continue. No. Okay. Then I need to stop share and share another screen. Okay. Which would be that one. Okay, you should now be able to see my Aussie Yen Weekly. Perfect. Thank you once again, KR. Right, so what am I looking for this week in terms of directional bias? It is all about, well, Donald Trump. Again, still, always. And this week, we're awaiting the news that's probably most pertinent around Iran. And if that is to escalate, or if Donald presses the button and says go, then we're going to be in a risk-off scenario, which brings the yen and the Swissy to a degree and the US dollar into sharp focus. Now I'm going to concentrate on the yen because I've got chart patterns that are telling me the yen may well be tradable this week. I'm going to go through the ones that I feel are tradable, but there's one or two better than the others. Aussie yen. Now, those of you who know what I'm looking for in directional bias, I can point out very, very easily. What I'm looking for is something like that. Now, what that is what I call a game changer. It's actually a key reversal bar. I call them game changers because they're not all equal. The ones that I like to trade are, and I'll describe them to you, candles whose high was higher than the previous candle on a weekly chart, but you could be on a daily chart. I don't generally like to go any tighter than that to identify these setups. The high is higher than the previous, and it closes, that candle closes on or near its low, as that one has done, as that one has done, as that one has done. But context needs to be in agreement, if you like, with not necessarily the trend, but what's driving the market at the time. And I generally go to the monthly chart to find out what's driving the market at the time. But on this chart, I can see that what was driving the chart here, which was this movement here, is no longer current. It's violated because we've now got a high that's higher than that. So we're waiting to find out what happens next, really. If I do go to the monthly chart, I can see quite clearly that we've had resistance in this area time and time again. Every time we come here, it seems to reject it. This time, it's made a new high, which is interesting. This is Aussie yen, don't forget. Aussie's been on a bit of a tear. The yen's been in trouble for the longest time. And every time we try to knock the yen, every time we try to give the yen some status, if you like, it disappoints. Like here, once again. So Aussie on a tear, yen not yet in favour, but that could change any time, in particular if we do go risk off. This is a classic risk off, if we go risk on, sorry. This is a classic risk off currency pair. When the risk is on, the Aussie outperforms the yen, general terms. When the risk is off, the reverse is the case. You can see quite clearly here that I'm saying that the risk has been on and the Aussie's been outperforming the yen. And as I said, that could change very, very quickly. The market is really, really volatile, as you know, at the moment. And this pair may well be the indicator that we're looking for in terms of risk on, risk off. Anyway, that said, what is driving the market at the moment? Well, as I see it, probably this base here. We've had a false break of that base, and since then we've had higher highs and higher lows, with the exception of this little interruption here. So difficult to be bearish, but as I said, if that Iran situation changes, then so will this. At the moment, on the weekly chart, do I have a directional bias? Yes, I have one of these game changer bars sitting here, right? High is higher than the previous, closed on or near its low. The interesting part about that, I also have a two candle setup that either confirms or denies that. This candle here has a low that's lower than the candle in question, and it closed on or near its high, which is the reverse of what we just said. But in this context, we've just decided that the dominant factor in the chart is, or what's driving the chart, is this base here. And we're seeing high highs and lows continuously, apart from that little hiccup that I mentioned before. So we're in a bit of a quandary here. Do we take notice of this one, or do we take notice of that one? What would I do right there? Not a thing, because I don't know yet. I'd wait for confirmation of either. So that's not my favorite one. This one could well be, and you'll note the difference. What's driving this market at the moment, in my humble opinion, is this move here. Game changer bar sitting there, price fell out of the sky. It's tried and tried and tried and tried and tried and tried, and we're in an uptrend at the moment. But we haven't taken out this high yet, and we're now getting signals that this move may be getting a bit tired. So reversal bar here, key reversal bar, game changer bar, followed up by yet another game changer bar. Double top, call it what you want. It's giving me the indication that the bears are gaining traction here. So I like this one far better than the Aussie versus the yen. And bear in mind, the Canadian dollar is also a risk-on currency. Does tend to follow oil at the moment, and that's going to be a subject of our discussion very, very shortly as well. But this one I do like, because we've got this dominant force, which has not yet been taken out, and we've got an inside bar on the back of that game changer bar. That's what I call a game changer plus. And if everything's equal in the morning and we don't get wild gaps in the market, I will be looking to place an order underneath this area here. Stop loss above the swing. So CAD yen will be my favorite play in the yen pairs. But we've got to watch what happens with Trump very, very closely. Swissie yen, similar to the Aussie versus the yen, not yet convinced that we're going down. This is out of context as a game changer bar. We need it to be in agreement with the dominant force. The dominant force, in my humble opinion, is still this base here, and we're trending off that. So Swissie yen, no. Euro yen, very similar, but a little bit more convincing because we've had a rejection here, and we've had the game changer bar here turned into a game changer plus with the inside bar. This could well be worth your attention. Euro versus the yen short as well, but I've chosen CAD yen in preference to that as well. The other two the other one that attracts my attention in the yen pairs is Kiwi versus the yen. You'll notice all of these are very, very similar. And of course, Kiwi yen and Aussie yen are very, very close neighbours. And we're seeing very much the same chart pattern as we saw in Aussie versus the yen, as we do in Kiwi versus the yen. The one difference is this is more like CAD yen than it is Aussie, because remember the Aussie's up here, because the Aussie's outperforming the Kiwi quite substantially at present. So the conclusion I would draw from that is that the Kiwi is more likely to fall than the Aussie. And the problem here that we have is this bar, similar to what I showed you on, what was it? Swissie yen, I believe. We've got a game changer bar here, where the low here is lower than the low of the bar in question, and it's closed near its high. So that suggests to me that we haven't got an inside bar. This one could go either way. So I'm not keen on trading that one over CAD versus the yen. So CAD versus the yen is the one I'll be concentrating on. The other one I wanted to point out to you that is a game changer. You can see I've highlighted it here. It's gold. Now gold's got this big game changer bar here. Then it's got another one here, and it's got another one here. The problem I have with gold at the moment, apart from volatility, which you can clearly see in the chart, is has it come back enough? And I can't answer that question. So I'll be staying away from gold at the moment until I get a clearer picture. So that's my take on the yen pairs for the week. But again, I stress you will need to be watching Donald Trump and the Iran situation very, very closely. Now, what I did want to, I'll stop that one and go to my next point, which should be back on the disclaimer, one would hope. If you could let me know if you're now seeing the disclaimer, guys, that would be wonderful. Thank you for that. Now all I need is my control panel for the slideshow. No, that's not where it needs to be. Excuse me, guys. As usual, having trouble with the control panel. Right. With any luck, I've got a control panel and you've got the slideshow that I'm about to present to you, which once again is the disclaimer. Let me move on. Last August, September, when I was doing Sunday Market Update, I placed an order on, and I'll show you that chart in just a second, based on the big picture. And I'm pretty much a big picture aficionado, if you like. I like to start there and work my way down. It gives me directional bias as I've just described to you. Now, in the case of last September, we pointed out a potential entry here on oil. Now, that chart is probably not obvious to you why I would want to enter long here, given that we have reversal situation, lower lows, lower highs, bit of a mix up here, but another lower low and a lower high. Why am I looking to go long here? Well, the way I trade is not a predictive method of trading. It's a reactive method of trading more so. And in this particular case, the reaction that I seek when I see a setup may or may not play out in a certain time frame. Now, the setup that I see here is a break of not only this trend line, but also this key level of support and resistance, where it's been support, 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 resistance, resistance, resistance through here, and there's even history beyond that. So my interpretation of that is that we have seen a false break of that level, or a potential false break of that level, because prices come back above it. Oh, you can't see my mouth. Thank you for pointing that out. I will put a pen on so that we can see. Or laser pointer is probably better. How about now, guys? You got my laser pointer? Yep, cheers. Okay, so this level here was the key level that I'm pointing out, where it's been support, 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 resistance, 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 support, etc., etc., etc. Now, we broke that level and came down to the next key level in my world before we bounced back, and importantly, back above the key level and the trend line. Then we retested both of those with that seller bar. Now, where most um, trend traders would be looking at that seller bar and going, wow, let's get short here. I'm okay with that. But what I, once again, as a reactionary trader rather than a predictive trader, say to myself, well, what if that doesn't happen? What if this false break is actually clear and present? I think there's a danger, which we're probably in as of tomorrow, but that's another story. If price doesn't go that way, then I say it's going to go that way. And here's where I want to be in the market to prove to myself, and the market hopefully will do the same, that this was going this way and not that way. Therefore, giving me that false break tick of approval that I seek. Now, I did place that order, of course, and I've placed it quite a few times since. Was I right or was I wrong, guys? Was I right? You guys will know what happened next to oil. Was I right or was I wrong? Well, that's what happened to oil. But if I was predicting that price was going to rally the next day, I would have been wrong. But that's not what I'm doing, right? I'm not predicting that price is going there the next day. I'm doing the reactive thing, not the predictive thing. So most, as I said before, most of my analysis starts with the bigger picture, bigger, higher time frames, and I'm looking for chart patterns. That's one of those. That's a chart pattern that I look for. When they present, I place an order, absolutely, because as I said, if what is conventional wisdom, if I put it that way, doesn't happen, then the opposite generally will. But it's a setup that is telling me, just like other setups on this chart that I'll point out in just a second, that at some stage, this will be of a point of interest for sure. So if it doesn't trigger, it goes on my watch list until we get to an interesting point. And we reached an interesting point, but we're also at another very interesting point where we're retesting this area again. And we may well in the next month or so, maybe even tomorrow, who knows what Donald's going to do, then we could just burst through there and the trade will be triggered. I see more things on this chart than, of course, that setup, and I'll just point them out to you. And the time frame that really isn't important to me. It's just the setup or the chart pattern that's telling me sometime in the future that level is going to be of interest. Just as this double top up here was telling me that price is going to fall. Now, is it going to fall tomorrow? I don't know. But if it does, I want to be part of it. Now, the setup took actually 1 year to play out, but there was a setup there. Slingshot traders will probably see this, but there's a trend line goes through here. It's been broken, retested, and there which is set up underneath that candle right there. But 1 year later, it played out. Was there opportunity to get in later? Of course there was, and not necessarily on the monthly chart, which is what we're looking at the moment. There may well have been lots of opportunities to get into that, but our directional bias gave us the opportunity to say when that setup came, we're confident that this is going to happen. Just the same as over here, where we got this massive shooting star. It took 5 months before that triggered here. Quite interestingly, at the very same level that this one worked as well. Interesting. So that's what I mean by my setup still there, and we're now 1, 2, 3, 4, 5, 6 months down the track, and it still hasn't triggered. Am I going to keep the order in the market? You bet. You bet. But did it matter then? Sorry, then that the order didn't trigger? Does it matter now that the order didn't trigger? They're the questions that I ask myself. And guess what happened? Since that setup appeared, the direction has actually been the opposite. So we're bringing down, 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 down. If you're in Australia, just like coal's prices, down, 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 which are furphy at the end of the day. But look what this is the daily chart of oil delivered as a Christmas present to me and others who may well have been on board here. This is the week before Christmas right here when that double bottom played out. You can see it clearly on the weekly and monthly charts, but here it is right here. First signal, bullish engulfing bar. Would I have traded that? No, because I wait for confirmation that this has actually turned. So I'm looking for something like that. That there, that there, that there. They're all higher lows than this one. So that's what I'm looking for to trade. So did I miss a few bucks? Probably, but I don't care. I got my confirmation. Then I got a clear, those of you who know Slingshot will see my candle pattern sitting right there on the trade line at a higher low. Perfect. So that's confirming the double bottom. It's confirming the bullish engulfing bar. It's confirming the higher low. So yes, I did trade that. Then I got out there, by the way. It was pretty much a perfect exit because we had this resistance level through here. Clean exit. Then with my new trend line, we got yet another slingshot setup. Those of you who know the dominator will see the dominator there. It took out the previous high and broke the trade line by more than 1/3 of its body. That's the criteria that I use. So we've got the double bottom, we've got the bullish engulfing, we've got higher lows, we've got higher highs. This is now trending, right? So the trend has changed. Then we got yet another setup. But I'm going to tell you guys, I lost this trade. because I made a mistake. And it's the mistake I want to point out to you and how it can be well avoided. This is yet another slingshot setup sitting here, three candles here, are telling me that if price comes back to here, it's going to break out. So I place an order above that tiny bar there. Now, my mistake was I put my stop loss below the most recent swing here, but it's only a tiny swing, as you can see. And look what happened. After I got triggered, price came back, and the classic of all classics, which I should have seen coming a mile off, where liquidity grab took place here and price just went bang. Those of you who don't know what a liquidity grab is, look up stop hunt because that's what it means. I got caught and I shouldn't have got caught. My stop loss should have been there. So I actually lost that trade. The interesting part right now, nothing's changed. We've still got all of those things working in a bullish fashion. And we've got another little candle here that's telling me something else. And we've got a trend line going through here. We've got another, what I call a dominator, and then a little bit of a pullback. Would I have preferred the pullback to come back to the trend line or the breakout area? Yes, I would, but did it? It may well have done that. Needs a little bit more closer scrutiny. But my suggestion would be, and this may well depend on the Iran situation as well, as to what happens next, because I think, these moves have probably been driven in anticipation of what may happen in Iran. So if it does, then this just continues on, in my humble opinion. But there's something else. Can anyone see on this chart here another bullish pattern? I'll just leave you with that for 2 seconds. Another bullish pattern here. It's a bigger picture pattern, but it's there. Yes, 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 yes. Got some yeses. Good. Horizontal levels being broken. Gary, 100%. But that's not the bigger picture that I'm seeing. I'm going to show you what it is. But first, before I do that, I'm going to show you um, one of my Sunday market up was back in July, from memory, July, yes, when I showed you this next chart of silver versus the US dollar. Does anyone remember that? If you were in the room in July, we identified a cup and handle. Here it is here, cup and handle. We also had commentary at the time telling us that the long-running manipulation of this precious metal, this is silver, was over. The JP Morgan, if you don't know the back story of all that, that's readily available as well. JP Morgan is the main source of where the accusations lie, or the main proponent of manipulating this precious metal over many, many years. And we said at the time, if this plays out, the sky is the limit for silver. Well, silver went, once it broke this cup and handle, from, was it $28, I think, here? You know the rest, right? $120 for silver. It's come off that, of course, at the moment, but that cup and handle played out very, very nicely. The next slide I want to show you compares what we saw on silver at that time to what is setting up right now on oil. This is silver back in July. We know what happened. It's up here somewhere. This is oil at this very moment. There's those two candles that we just looked at. Is this going to play out the same as silver played out? I don't know. I would like to think that will be the case. If it is, I'll be a very, very happy man. But it's the setup that I wanted to point out to you that confirms or probably puts a big underline under what we're seeing on the daily time frame at the moment, and that is bullish activity. So I believe that being in oil to the upside is a far better option than being in oil to the downside at the moment. Fundamentals may play a big part, of course, as I've suggested, and I'm sure you're all over it anyway, and you're watching Donald Trump like no tomorrow because you need to. So that's just where I thought I might point out to you that there's some interesting things going on in the world of oil at the moment. Not suggesting that you jump out and trade it right now, but I will be jumping back in tomorrow if we don't get a crazy gap in the market or whatever's likely to happen. We will see, guys. We will see. So I hope that's just a little bit of illumination on what I see in the markets and how I look at them. What I would now like to do is how I finish my Sunday market update each and every time I present, and it's tell you all about the things that keep me awake at night. And the first of those things, sorry, I've lost the chat box. I'm not sure if anybody's, oh no, there it is. Okay, I can still see it. What keeps me awake at night? And I can assure you, I get kept awake at night quite often. One of those things of late is this question. What if Pinocchio said, "My nose will grow"? I'm not going to give you answers, right? Just the questions. What if Pinocchio said, "My nose will grow"? Worth a thought. And this one, why are they called apartments when they're so close together? Apartments. Sorry, I just thought I'd point that out. Got it? Why are they called apartments when they're so close together? And the last one that I'm going to share with you is this one. What happens when an unstoppable force hits an immovable object? They're the things that I would like you to consider over the next 30 seconds and then forget them forever. And now I would like to thank you all for being part of the Sunday Market Update this week. And I look forward to your company next time I present. Hope you have a wonderful week ahead. And don't forget that there's a lot can happen overnight in the next couple of days with the Iran situation. Guys, thank you for the thank yous. It's been my pleasure. Thank you, Sam, for looking after me.